Hi, Mish. How are you?
Good morning, Dale. I'm good.
Good. It's great to see you. It's amazing how 3.5 months flies, isn't it? I mean, didn't we just talk? So, what's top of mind?
Well, when we did talk, and I guess we talked before the year ended, right?
Yeah,
Looking into this year, pretty much I'm getting what I kind of expected, which was the persistent trading range, especially if we look at the SPX, kind of a stock pickers market. Um, Really a lot of obviously lack of credibility with the Fed, although today may help at least save some of the egg on their face that they had given the recent debacle with the banks. Um, and really at this point, it's still kind of a stock picker's market, and you kind of have to follow the hotter sectors. And they're signaling pretty blatantly what's doing well. I mean, even last week, with everything crashing, the NASDAQ held up pretty well.
it
Semiconductors
did.
never broke down under the 50-day moving average if you look at SMH.
Yeah.
And so people are still believing that growth stocks and particularly AI stocks are going to be the thing no matter what. And we still don't really know how earnings season is going to be as we're going to get into the Q1, but it looks like there's going to be pressure. I still, I'm in the inflation camp. 6% is certainly better than 6.5%, but it's still over 6%. So I think that this is a market of opportunity, and you have to take those opportunities swiftly. If you're looking to accumulate for more of a passive type portfolio, I think that there's some danger there still, but at least it's not nearly as volatile, even though we had some pickup in volatile, as a lot of people feared because of this persistent trading range.
Okay. So is it possible that this whole solvency issue with SVB and mid-sized banks that people are worried about, can actually be a boon for the stock market? Because look at because of the big fall in yields, the crisis could be what lights up risk again in things like semis and the NASDAQ that are more affected by rates than most other sectors, growth stocks.
Well, yeah, I would say anything's possible, of course, but the way I look at it is that with yields coming down, you have the risk of it being, and I shouldn't even use the word risk because we're going to use the word risk again, but with yields coming down, you have the benefit of the growth areas continuing to lead. But what we have seen for years is semiconductors and growth stocks leading, and the rest of the sectors that really measure the health of the U.S. economy reluctantly following along, but acting more like a ball of chain. So in order for me to get really optimistic about the market in general and the economy in general, we have to see the retail sector cooperate. We have to see the
Okay.
transportation sector cooperate. And we have to see the Russell 2000 cooperate, which obviously got dragged down tremendously with the
Yeah.
banks. So to
It's
me,
that started before the SVB. I mean, the Russell, there was one day last week out of nowhere. I mean, most of the market was steady and IWM was down 24
and you could look at
before.
KRE. Exactly. So let's look at
Yeah.
KRE, which is a member of my modern family, right? It's the prodigal son. It's amazing how classically it acts like the Bible parable because it goes and hoards all
Look
the
at that.
money and then gets into big trouble and then comes back asking for forgiveness. And what was so interesting about KRE, I was writing dailies a couple of weeks ago saying that the regional banks were flashing some kind of warning. Of course,
Yeah.
I could never tell you what it was exactly, but it certainly told me that when it comes to the regional banks, something was going on. And that's important. Obviously, we saw how important it is. So yeah, did we get oversold? Yes. Was today's number something to cheer about to a degree? Yes. But I wouldn't get overly cheerful because again, inflation is still hot, and now the Fed has added pressure because of what happened last week, even though it wasn't a credit crisis, it was a liquidity crisis, and there is a difference. I do believe that if I was sitting there as Powell, I would be thinking to myself, okay, I've raised the rates and clearly inflation isn't going up anymore, and it's going down, but not far enough. And I have really, really an important decision to make now. Do I hold it? Do I go 0.25%, which is most likely what they'll do? I don't think they'll go 0.5%. And that's just this month. I mean, people are looking at 1 month at a time. But the truth of the matter is we still have all these other things going on, geopolitical stuff that takes a back burner when we have a bank crisis. But they're still out there. And that's kind of where I don't want to take my eyes off of that ball either.
Okay. Do you think that we are shifting from the narrative being all about inflation to now at this point, after more than a quadrupling of rates, that it's a year later and the tide is going out, and now we're starting to see who's naked because the tide is going out, and we're finally going to have a stage where we have solvency issues. SVB isn't the only institution that's been long bonds for a year and taken 40% haircuts. Pension funds, etc.,
right. Well,
municipalities.
Somebody sent me an article. I just want to make sure that I say this correctly. So I'm going to look at my notes here. But Silicon Valley had 185 to 1 debt to asset ratio.
Wow.
So if there's anything to
good
take
leverage.
Away, yeah, right. But with our own U.S. debt, maybe we're not at 185 to 1, but it's still really, really high.
130, isn't it?
Yeah. So to your point, Dale, is there ability for some of these stress fractures to turn into bigger cracks? Well, we saw that with a 185 to 1 debt to asset ratio in the banks. We could certainly see that in other places because I don't think we necessarily have really absorbed the fact that we went from 0 rates up to yields over 4%. So figure 4.5 between 5.
In a year. That's like chemotherapy, radiation, and surgery all in the same day.
Exactly. And so what, we know that what's most important is not necessarily the rates going up, but the rate of change. And it's been dramatic. So again, going back to Powell, that tells me that he probably is well aware of that. I mean, you would think. And he doesn't want to necessarily become more dovish. But it wouldn't be surprising if he's thinking to himself, okay, well, the market is expecting something. Maybe we'll just say, well, we're going to, he always says data dependent, and the labor market's still being super strong. He'll go either one way. He'll either say we're going to hold here and see how things are absorbed at these current levels, or we'll go up another 0.25% and then maybe hold. Whatever he does, quite honestly, I've always felt it was too late. It was more reactive than proactive. And that's just one aspect of the market. Like you're seeing here, the so many of these companies that were so highly leveraged based on basically zero
rates.
Yeah. Right. How can they sustain? And I also thought what was interesting about the bank thing was that a lot of it was funding startups. And so, the labor market, I expect, will change a bit. I think we're going to start to see the unemployment numbers go up more as the year progresses. And I also think that the stagflation narrative that we've talked about is still there. It's just right now, it's hard to really support that, except if you're looking at gold, because oil's come off and the grains have come off. Some of the other commodities were doing really, really well, like steel and copper. Well, they've come off. They're still pretty high. And then, of course, my great barometer, which is sugar, is still real high. So it's almost like you have to wait. You have to buy the dips in the commodities is how I'm looking at it in certain commodities. Yeah. And then you just have to kind of wait for, like I said, some kind of a stress fracture to get bigger. And it may not even look like something internal in the U.S. It could be, like I said, it could be anything going on outside of the US, and there's a lot of stuff going on.
Well, I think Dr. Copper still looks respectable. I mean, I don't see this as being anything but corrective, just basically shaking off the overbought condition more in time than
Mm-hmm.
price here. And
Mm-hmm.
what's interesting, Mish, is that take a look at this copper chart right here and
Yeah,
then compare it to uh, what I just had up, the semiconductors. Okay, there's copper. Look at
mm-hmm.
that. There's semiconductors.
Right, right.
So, Dr. Copper is saying don't worry right now, and the semis are saying don't worry, and some interest rate pressure is coming off. I think that we probably have a lot of fear. I think do you think that the public is underinvested in the market? I've heard people say that that the market is very underinvested, and we're not close to levels we were a year ago, way down from levels
Well, I
a year
think it
ago.
depends on where you're looking, right? So,
Equities.
no, but I mean, in terms of what public are we talking about here?
Oh, okay.
Yeah, I mean, if you're talking about the passive investor who has their IRAs and their 401s, they're still in them.
Yeah,
I talk to people all the time. We don't do IRAs and 401s, obviously, because this is what we do for a living.
yeah,
I think some money has come out to go more into fixed income, which is probably smart if you can lock in. Recently, more at like 4.5. Some people have been able to get 5 in CDs. I think the retail investor has actually come back in the market since January when it looked like everything was safe again. So I don't know. I know hedge funds have been selling into these rallies and some institutional investors have been selling into these rallies. But I don't
yeah.
know if I could say the number of underinvestment is so broad that we have a factor of FOMO
Okay.
coming from that aspect. Do I think there's always going to be FOMO at some point from the retail side? Of course, that's just the nature of the being. And as we know from 2020, there's a lot more people who talk about trading than I had ever heard prior to COVID.
Okay. You have a view on the dollar, Mish? We had this bounce from par and a half to 5.5. We're pulling back here. Do you think that was it? That would be less than a 38% correction from high to low. Or do you think there's another wave left to the upside in the dollar?
I think it went exactly to where we kind of anticipated. Maybe if it had gone over 106, I would have
Yeah.
been a little bit more prepared for a bigger rally, but it couldn't
Okay.
even get there. And again, excuse me, there's always the balance between the technicals and the fundamentals. So it got oversold and it bounced. At the same time, you were having a conversation and it looked like a risk play, safety play to go to the dollar. And then, of course, last week, people didn't go to the dollar as a safety play and they went more to gold and bonds. And so these relationships are still playing out. I still think the dollar is going to go lower, not just for the reasons that we talked about in terms of the U.S. economy and not necessarily so much faith in that the U.S. can pull off a soft landing here. I think a lot of foreign investors have been selling the dollar or not buying the dollar. I've heard talk in the Middle East that they're selling dollars. You still have the BRICS thing out there. And of course, a decline in dollar is good to a certain point, right? Until you
Yeah.
have much less purchasing power with your dollar in a time where we still have a 6% inflation rate.
Yeah.
This is why people get so hysterical about numbers. So think about it, right? You could buy less than you certainly were able to buy last year with your dollar. That could even get worse. It's still 6% of an inflation rate, not really all that great. And if you're going into fixed income, you're still not getting the same rate that matches the rate of inflation. So it's
Yeah.
it's a
It's
trying
still a
environment.
negative rate. It's still not a
Exactly.
real rate.
Exactly. And so we are precarious at best, which is why I keep going back to a trading range. I can't imagine at this point, I'm not saying forever, but I can't imagine at this point, maybe we're looking at 2025, but I can't imagine at this point why all of a sudden we should get really overly optimistic, especially since the government will always continue to prove And it just depends on where they spend money, depending on what party it is. It's not like one party spends so much more than the other. They just spend on different things. But sovereign spending is here, not just in the US, but clearly we've seen that globally to protect their economies from falling out of bed.
Do you ascribe to the expression that in a bull market, anything that could go wrong doesn't, and in a bear market, anything that could go wrong does? And does that make you worry about the raising the debt limit, where we're going to start running? That's something else that will be coming up in June, where they run out of being able to do extraordinary measures to keep things going. Do you think a self-inflicted wound or a downgrade is possible again?
Like in 2011,
Yeah,
which was the last time it happened. And of course, what
yeah,
happened? They reversed it. You know, game again. It's like look over the, it's like going to the Grand Canyon and trying to get that great shot. And then some people, and one time it happens, but very rarely people fall off the cliff. But mostly people go, whoa, and step back. And I
yeah,
think it's kind of like what's going to happen again. We have an election coming up, and with all of the vitriol that happens between the two parties right now and the
yeah.
accusations, I mean, what party wants to be the one in front of an election responsible for a downgrade on the U.S.? So I don't
think
worry.
some don't care. Anyway, I mean,
Oh,
that
those
is
are the fringe.
universe.
You're talking about
Huh?
the fringe. You talk about the fringe. I mean, I think for the
Yeah, okay.
most part,
All
we
right.
hear about the fringe because the fringe is
They
newsworthy.
make news. Yeah,
Right, exactly.
yeah. Anyway, that's everyone's saying the same thing. There'll be a bunch of theatrics and they'll do it.
Yes.
So
Histrionics and politics seem to be
it
synonymous.
kind of the same people who up until recently said VIX is dead. It doesn't work anymore. And right? I mean, weren't you hearing that? The
Oh,
VIX
yeah,
is dead. VIX doesn't work. Well, it worked.
exactly.
And there might be more left after, maybe all we do is get a bear market rally. We start getting through these levels at 29. I know people talking 50
Well,
for
yeah.
a VIX.
Did I send you my Outlook 2023, how to grow your wealth in 2023?
I don't know.
I have
I
to
don't
make
think
sure I
so.
send it to you then. I mean, it was a
Were you
very,
talking about Volmageddon? Some people said there could be Volmageddon.
I wasn't that clever.
All right.
But I did talk about volatility and how it was definitely something to keep an eye on. I certainly talked about inflation a lot, and I always felt that gold was probably my top pick in terms of a more passive type investment. When I say passive, I mean that I'm not necessarily looking to sell rallies in gold, more every time I get a substantial dip, buying more. And that's what we've done. So that's our big buy and hold position that we've had. Our models are kind of across the board. And it's been interesting to watch what the quant models are doing, because they have bought a lot of streaming stocks. They have bought a lot of semiconductor stocks. They were in industrial metals and are switching more into the miners. From a more discretionary standpoint, I've seen a couple of other interesting trends emerge. And I think it's important to talk about this because it gives you people some places to go. For example, what's becoming bigger and bigger and bigger is streaming of sport events and some live music events. So like, for example, Formula One stock, that had a huge move already this year. Live Nation is looking pretty good. It pulled back with last week. Netflix still doesn't look all that bad. I mean, I don't want to see it break 295. And there's another company called Endeavor Group Holdings, which is in a bullish phase, which also has to do with entertainment and streaming. Another sector we've been long in Boeing and some of the defense areas. Also, the industrials like General Electric. I mean, we've taken some profits because it made such a spectacular move. And so,
do you think this was a good break to buy in GDX in the miners? And I only bring it up because, one of the bearish arguments for mining has been high energy costs, because it costs a lot of money to bring stuff out of the ground.
right.
And with what's been happening with WTI, that's got to be another edge for miners, especially for heading into the 60s. So, you know, you have higher gold prices and lower costs going into it. I think the miners are a great area, my
Yeah.
personal
Well,
opinion.
actually, so talking about, this is what's so interesting is to have spent my entire life as a discretionary trader, but the last several years with all of the developments that we've had for algos that
Yeah,
spread everything from NASDAQ All-Stars to sector rotation to
yeah.
alpha to global macro. The global macro quant is saying buy gold miners right now.
Okay, interesting.
And so, yeah, and in the formula, of course, it takes into account momentum, moving averages, phase, some fundamental stuff as well, relative strength, volume patterns, etc. So if that's the case and it's right, well, that certainly supports what you just said, which is it could be also on the heels of the oil prices. Now, the oil prices, yes, they have been incredibly low, but I've actually been watching natural gas
Oh my
again.
God. Yeah.
Yeah, I know. Oh my God, right?
Yeah, but
But
yeah, you don't let your husband trade it, do you? Because it's a widow maker. You can't
not
you
for
can't
us.
let huh?
Dale, I
Not
went
to you.
on
All right.
Charles, yeah, but I went on Charles Payne's show at the end of 2020 on Fox, and I said, buy natural gas and buy Scorpio tankers. And he actually looked at me and he said, you're crazy.
Look, we're putting in a higher low. Look, and Mish is pointing it out. Nice little
Right?
higher low after this, and we had some divergence here on the
Yeah.
daily. So
Do I
why
think
can't it rally back to $5? Just be
absolutely,
a
yeah.
reversion to the mean, right?
Absolutely. And actually, speaking of that, it did have a mean reversion in momentum when it was making the new low. And then the next day when it gapped up, that's when I started saying, I think natural gas has bottomed. Now, of course, it had an initial move and it's come off, typical natural gas. But I would not necessarily, I think it may have bottomed. Do I
Yeah,
feel like it's a huge rush? I mean, you're looking at your chart there. So
yeah,
obviously 03 looks like would be a good place to,
yeah.
it would
That's a
generate that.
daily.
That's
Yeah,
a daily.
yeah.
If
Back
you
over
wanted to get
three.
in now, right. So I'm back to, and this is exactly what happened in 2021. I was watching actually natural gas more than I was watching crude oil at the time
Okay.
because it got so cheap. So that could be interesting. I mean, there's at this point right now, like I said, I think that the market, obviously 390 or 3,900 is a great resistance level. It held as support for the first part of the year. Now it's going on as a resistance. I can see here pre-market, it's right up to close to 390. So that's something to look at. I think in the Qs, it just got through 290, so it's back in a bullish phase and it's going to hold. That's interesting. But you got to really, and semiconductors is now back through 240. So yeah, we're gonna rally now. We've got the Fed meeting on the 22nd, and we'll see what happens from there. And of course, the TLTs are back down a little bit. But what's interesting is gold hasn't come off at all.
Yeah,
So there is a segment of the market, besides me,
yeah,
that wants to make sure they're invested in gold, besides the physical gold, obviously the gold futures.
yeah,
And my advice to people is don't try to trade 20 different things at once. Really focus on just a few things. And you have some really clear numbers. The one great thing about a trading range is that you can pretty much say, I'm going to sell as we get closer to the resistance areas. And I'm going to buy when we get closer to the support areas. And I'm going to stick to the strongest sectors. So that's why semiconductors rule. But if you do not see the follow through in IWM, which has to start by getting back over 180, it's trading at
yeah,
177 pre-market, then you know that these things are going to be short-lived. And the most difficult market to trade is the trading range type market
yeah,
because people get frustrated when they don't get the follow through.
yeah. They want breakouts or breakdowns, and that's not happening. I will say one thing though, Michelle, is that everyone's embraced the trading range narrative now, which makes me think, you know what it's having me think,
Of
that
course, the
soon
contrarian.
we're going to come out of probably both ranges, one first and then followed by the other. But I wanted to show your website where people
Oh,
know
thank you.
where I have it up, and you know, I think I showed your book came up, and you know,
Right. There's the
there's
daily. So, there
yeah,
was my little article about a consumer price. And I think at the, there should be the ability to be able to get the report. One of the other areas I've been watching is, obviously I'm back to watching what happens here with China and
yeah,
Vietnam. I mean, they've just stagnated now, but I have had a theory about Vietnam, and it was kind of my theory about Greece. Remember, we talked about Greece as the sleeper trade, and
yeah.
Greece went from like 24 up to 32. So it's taking a while, but I kind of, even though Vietnam and Greece are very small countries, both of them, but Vietnam being a bit smaller, I do believe that there's an opportunity there as things that we are so used to as far as cheap goods being manufactured in China. I see more labels
Moving.
on
Yeah.
clothes that are saying made in Vietnam. So I've been looking there. But anyway, getting back to the website, yeah, you can see we have a lot of stuff. What my daily's been trying to do besides give actionable information is really using some of our tools and some of our quants and telling you like, okay, this would be a good time, like for today, to look at things that maybe had either a bullish compression, which means they didn't come up that much and they've kind of gone sideways during this down move, or a bullish reversal, which is yesterday we started to see a new low with some kind of reversal based on the parameters of high volume, makes a new low, closes at the top 25% of the range, and in what sector that could be that would make it kind of interesting. Like, for
Yeah, what a
example,
move in Bitcoin yesterday from
oh my God, and that
20,000, huh?
Bitcoin is now up at 26,000.
Yeah,
So
that's
it just
6 grand in 36 hours.
Yeah, right,
Yeah,
exactly. So, I mean, a lot of people still are not trading Bitcoin, obviously, but that took a lot of people by surprise. But when I
yeah.
say reversals in strong areas, this might be a time where it might be interesting to look at something like Intel, you
Okay.
know,
Yeah,
because they are involved in the big chip development that we're starting to see in the United States. Obviously, NVIDIA, I was kind of hoping NVIDIA would get back down to 200. It didn't. Now that's up a little bit. So yeah, this is still a great trading market, an active trading market. And so I couldn't really tell you we're going to new highs or new lows yet. I still, though, think that I wouldn't necessarily get too complacent with A, like you pointed out, volatility, and B, looking at the idea of inflation, C, looking at the Fed screwing up somehow, looking at the dollar, and finally, really watching the gold as kind of a
yeah.
signal.
Okay. Mish Schneider. Great to have you again, Mish. And, some nice nuggets came out of this today, and a trading range, and semis look good, and take a look at Vietnam. Gold should be a core holding in this environment one way or another. So your intermarket analysis still elite. I appreciate you being with us today, and I root for you and Keith and your team, and hope this is a great spring quarter coming up for you and all your people.
Thank you so much, Dale, and you've been such a great support to us, so we really appreciate you as well.
All
Thank
right,
you.
thank you.
And
Thank you,
Blake
Michelle.
and Stelios and those
Yeah,
guys who are,
but
yeah,
oh, you mean the dream team? Okay,
the
those
dream
guys.
team. Yes,
Yeah.
those guys.
All right. Well, thank you, Michelle. Great
All
having you.
right.
I'll be in touch with you on Twitter. Good hunting, and great to talk to you. I'm thinking about checking out Santa Fe. I've never been there. I may go there this summer. It's on
Oh,
my
please.
It's on my bucket list.
Oh, you'll have a great time. We'll show you around.
All right, Mish. All
All
right.
right.
Have a great day.
Take care.
All right. All right, everyone. That's a wrap. You could